Hey everyone, and welcome to today's Explainer. If you're an Indian seller on Etsy, whether you're uploading digital downloads or shipping physical products across the globe, you already know that managing the financial side of your shop can feel, well, a bit like navigating a maze blindfolded. Today, our goal is to completely eliminate that widespread confusion around Etsy sales, international taxes, and Indian GST. We're going to break it all down using the latest guidelines so you can finally understand exactly where your hard-earned money is going. So let's start with a scenario you are probably very familiar with. You make a brilliant sale worth 10,000 rupees. You get the notification on your phone, you do a little happy dance. But then, and we've all been there, you look at your actual settlement in Pioneer and it's nowhere near 10,000 rupees. Why does that happen? Why is your sale shrinking before it even hits your bank account? Well, to really understand this, we need to think of every single transaction as being split into three distinct buckets. Okay, let's dive into this. Here's our roadmap for today's explainer. We'll start with a big tax distinction, move on to global buyer-side taxes, and then look at Etsy's seller-side deductions. After that, we'll cover Indian TCS and TDS, how it all relates to exporting and your Indian GST. And finally, we'll tie the whole thing together with the ultimate calculation formula. All right, Section 1, the big tax distinction, separating their taxes from your costs. We're looking at two entirely different categories of deductions here. In the first category, we have the buyer checkout tax. This includes things like US sales tax or UK VAT. Etsy automatically adds this on top of your listing price at checkout, collects it from the buyer, and remits it directly to those foreign governments. This is absolutely never your revenue, so you don't need to manually add it to your prices if Etsy's already collecting it. Now, in the second category, we have seller balance deductions. These are the standard Etsy fees and Indian tax withholdings that get deducted straight from your payment account. You know, why does this matter? Because those foreign checkout taxes are never, ever part of your Indian GST liability. Mixing these two buckets up is where so many sellers make their most expensive accounting mistakes. Moving right along to Section 2. Global taxes, buyer's side. Navigating international VAT and GST. The rules here are vastly different depending on where your buyer is located and what exactly you're selling. If you're selling digital products, like say a Canva template, it's pretty seamless. Etsy just automatically collects and remits VAT or GST for buyers in places like the UK, EU, Australia, New Zealand, and Singapore. Easy, right? But for physical products, it's a bit of a minefield. Take the UK, for example. Etsy only collects VAT on qualifying imports if the package value is £135 or less. Above that, bam, customs charges might hit your buyer right at the border. In Australia, there's a 10% GST on orders up to $1,000 Australian. In Singapore, it's a 9% GST on imports under 400 Singapore dollars. Etsy facilitating this compliance is a massive relief, but as a seller, you absolutely must know what your buyer is being charged. It's the only way you can anticipate their total costs and avoid those dreaded angry messages about unexpected customs delays. Now, quick pause. Physical product sellers, listen up. We have a massive update on the horizon. If you ship physical goods from India to Europe, you need to prepare your business for some absolutely critical changes coming in 2026. Starting July 1st, 2026, based on current guidance, if you're shipping a physical product to the European Union, a flat €3 per item customs duty is going to apply. Right now, for packages under €150, Etsy can just collect the VAT at checkout and you're good to go. But this new €3 duty is a whole extra layer you and your European buyers need to account for. If you sell low-cost items, actually, scratch that, even for mid-tier items, that €3 per item is really gonna sting. But wait, there's a little more. Specifically for France, starting March 1st, 2026, a special €2 import fee per item type will be applied at checkout for non-EU imports on eligible orders under €150. That means your buyer in France is going to see your item price, plus the VAT, plus a €2 import fee. You definitely need to bake these upcoming changes into your strategy when pricing goods for the European market. Okay, on to Section 3, Etsy's deductions, seller side. Let's look at the hidden costs of selling. So these are the fees that are deducted right out of your seller account. You've got the standard 20-cent listing fee plus the 6.5% transaction fee, which, remember, applies to both your product and your shipping cost. Now here is a big one, specifically for our Indian audience. The payment processing fee is currently 5% plus 25 rupees per order. If your sale magically came through off-site ads, boom, that's another 15% taken out, or 12% if you're a high-volume seller.
Don't forget the 2.5% currency conversion fee if your listing and payment currencies don't match. And finally, there's a 0.05% regulatory operating fee just for Indian sellers calculated on the item price, postage, and gift wrap. Look, I know it sounds like a lot, but it's vital to remember that these are simply your operational business costs, not government taxes.
Which brings us to Section 4, Indian taxes, TCS, and TDS. Let's get this government withholding explained. Let's look at the true nature of these percentages because it confuses so many people. Etsy collects 0.5% for TCS and 0.1% for TDS. But be careful, without a proper PAN and GSTN on file, that TDS can shoot up to a painfully high 5%. A lot of sellers mistakenly think this is some kind of extra tax forced onto the buyer. It is not. These are tax withholdings managed by Etsy that are reported directly back to the Indian government. They are deducted from your final payout. But here's the good news. Because they are just withholdings, they actually reflect as a credit in your tax account. Just make absolutely sure your PAN and GSTN are perfectly compliant to keep that TDS rate locked at the minimum 0.1%. Section 5. Exporting an Indian GST. It is time to keep those books legal and clean. Honestly, if you take only one concept away from today's explainer, let it be this golden rule: the zero-rated supply. Whether you're selling a $20 digital planner to someone in California or a $100 brass bowl to London, under the IGST Act, the export of goods or services qualifies as a zero-rated supply. Practically, this means if you file under an LUT, a letter of undertaking, you can generally export your products without paying output IGST. Now, you absolutely still have to report that export turnover in your GST returns, for sure, but you do not owe the Indian government tax on that international sale. Which brings us to the biggest myth we need to bust today. Never, ever reduce your GST sales turnover just because Etsy collected foreign VAT. If your product is $100 and Etsy collects $20 in US sales tax, your actual export consideration, meaning your Indian GST reporting amount, is still $100. It is not $80. That $20 was a foreign jurisdiction tax that Etsy handled completely on their end. Your Indian GST treatment must reflect the actual supply consideration of your item. Do not artificially lower your reported revenue just because you saw a foreign tax deduction. Finally, Section 6, the ultimate calculation formula. Let's actually follow the flow of your money. Let's bring all those buckets together to see the complete picture chronologically. Step 1. The buyer pays your listing price plus any applicable foreign tax, like US sales tax. Step 2. Etsy immediately takes that foreign tax and remits it straight to the foreign government. You literally never touch it. Step 3. From your listing price, Etsy deducts their 6.5% transaction fee, payment processing, ads, and regulatory fees. Step 4. Etsy then withholds the Indian government's 0.5% TCS and 0.1% TDS. Step 5, what is left over, is your final settlement, which finally arrives in Payoneer. And Step 6, you correctly report your original listing price as a zero-rated export sale in your Indian GST returns using your LUT. It's like a giant puzzle, and this is how the pieces fit together. Let's look at this with a concrete, real-world example to prove exactly where every single rupee goes. You sell a physical product to the USA for 10,000 rupees. Etsy calculates, let's just say, 800 rupees for US sales tax. So the total paid by the buyer is 10,800. But remember, that 800 is remitted right back to the US. Now, from your 10,000, Etsy takes their 6.5% transaction fee, which is 650 rupees. They take the 5 rupee regulatory operating fee. Then they withhold 50 rupees for TCS and 10 rupees for TDS. Your final payout is whatever remains after these deductions, plus any payment processing fees. Now, here is the absolute key takeaway. That 800 rupee US sales tax and the 60 rupees in TCS and TDS are never, ever charged as Indian GST on your invoice. They are completely separate mechanisms. So, here's the big question you need to ask yourself as we wrap this up. If foreign VAT isn't your Indian GST, and Etsy's fees are completely separate from government withholdings, are you actually tracking your global Etsy sales correctly? Are you maximizing your profits, or are you accidentally overpaying on taxes due to accounting confusion? It's really time to review your books, deeply understand the 3 buckets we discussed today, and make sure your GST compliance strategy is actually working for you, not against you. Thanks for joining me on this explainer, and happy selling!